Now, Reserve Bank Governor Lesetja Kganyago says inflation targeting framework has served South Africa's economy well. He was addressing the South African Reserve Bank's 2025 Biennial Research Conference, currently underway at the Cape Town International Convention Centre. Kganyago says since its adoption 25 years ago, the economy has experienced lower inflation.
The inflation targeting framework has served us well. Since its adoption in 2000, the South African economy has experienced lower inflation. As a result, we enjoy much lower interest rates. Back in 1998, the repurchase rate was above 20%. Today, the repurchase rate is just 7.5%, which is higher than the lows experienced during the pandemic, of course, but well below the averages of the previous decades. Inflation targeting has also reduced macroeconomic volatility, enabling the economy to better weather the severe economic shocks and crises of recent times, including the 2008 Great Financial Crisis or the 2020 COVID-19 pandemic. The benefits of inflation targeting have made it a popular framework for central banks, and the framework has become a global monetary standard, as our keynote speaker, Claudio Borio, will discuss. However, inflation targeting continues to be challenged, with central banks facing various competing demands, including faster economic growth and greater responsibility for financial stability. These have once again come to the fore for both advanced economies, which we will discuss in session 2, as well as emerging markets, which will be detailed in the third session. One particular issue that both advanced and emerging market economies grapple with is making sure that their targets are efficient and fit and good, and useful definitions of price stability are identified. Most advanced economies have settled on maintaining inflation targets at 2%, while emerging markets are closer to the 3% mark. Early adopters of inflation targeting have updated their frameworks to better reflect changing realities on the ground, with Armenia being the latest central bank to also reduce its target to 3%. In this respect, the South African target is now rather dated, reducing our competitiveness and opportunity to generate faster and more sustainable growth.